Welcome to Understanding the ACH Network training. As more and more checks are being converted to electronic transactions, the ACH volume is steadily growing, especially with the introduction of same-day processing. Consumers and businesses are also being introduced to many types of ACH products and services, so it's wise to understand the ACH network. Thus brings us to the question, what is ACH? ACH is an acronym for Automated Clearinghouse. In a nutshell, it's a nationwide financial network for the distribution and settlement of electronic transactions among financial institutions. The transaction can be a next-day settlement or same-day settlement, and there is a set of rules and formats allowing the exchange of transactions. ACH began in the early 1970s with a special committee on paperless entries. The first ACH Association began in 1972, and the National Automated Clearinghouse Association, which we now know as NACHA, was formed in 1974. The Monetary Control Act governing ACH transactions was established in 1980. An ACH transaction is an electronic transaction that can be either a debit or a credit. It can be a large dollar item, or it can be small in its value. It can also be posted to checking or savings, directly to a loan, or to GL for corporate transactions. An ACH entry can be initiated and/or directed to a consumer, corporate, or government transaction, and it can be single or recurring. Keep in mind, however, that before each ACH transaction enters the network, it must be formatted appropriately according to the standard entry class code and NACHA formatting requirements. Each ACH transaction has a standard entry class code. The standard entry class code indicates the type of transaction and the formatting requirement that applies for the transaction. Each ACH transaction also has a transaction code, which indicates whether the transaction is a debit or credit, or if it is destined to be posted to a savings, checking, loan, or GL. Each ACH transaction will be identified by your member's name, unless it is an electronic transaction, such as an ARC, BOC, or POP. It also has your member's account number at the financial institution, identifies the institution that should be receiving the transaction, and your member's identification number, which is an account number from the institution that is sending the transaction. Or if it's a check serial number from a converted check, it will also have the company's name or merchant that is debiting or crediting your member's account, along with their ID that can be identified into the network as well. Each transaction has an entry description so that the member knows exactly what the transaction is when it posts against their account. For example, it tells the member whether it's a payment, payroll, or annuity. The transaction is also accompanied with the company name, which tells the account holder where the payment originated. There's also an effective date. This is a date on which the company or merchant intends for the item to settle, but keep in mind it is not the settlement date. The settlement date is inserted by the ACH operator and is the date on which the funds are to settle and post to the account. There's also the routing number of the originating depository financial institution. Lastly, there's a trace number. Trace numbers are assigned by the originating financial institution. The trace number is used for research by both the originating institution and the receiving institution and used in the return process. Some examples of credits for consumer transactions are on the screen, such as payroll, dividends, and pensions. Pre-notifications are test transactions using $0 transactions to validate consumer account numbers. It is recommended, but optional, to validate credits so that the intended recipient receives his or her funds when live transactions are created. Some examples of debits to a consumer's account will be insurance, mortgage, and loan payments. It can also be at the point of sale, internet transactions, telephone transactions, truncated or converted paper transactions. Unlike credits, authorization is required for most ACH debit transactions. The authorization can be obtained in different forms depending on how the transaction was initiated, and the proper standard entry class code will be assigned. Like credit transactions, a pre-notification is optional for debit transactions. Some examples of corporate transactions or company-to-company transactions include intracompany payments and state and federal tax payments. Like some consumer transactions, corporate transactions carry addenda information, and they are generally large dollar transactions. So keep in mind, different rules apply. Let's take a few minutes now to look at what isn't an ACH transaction. Wires are not ACH transactions. Wires follow different regulations and guarantee funds same day, usually consist of high dollar amounts, and are single payments. Some other payment methods that are not ACH are debit cards, simply because we can use them offline and it requires a network and proprietary rules. Credit cards, because they're a line of credit, and ATMs because they're card-based with a PIN and are usually online. Now that we have defined ACH and understand why we need to know about ACH, as well as the different types, let's look at the participants. We have what's called an originator, originating depository financial institution, ACH operator, receiving depository financial institution, and receiver. An originator is the party which initiates the ACH transaction. Again, it can be a company, a government agency, or a person. The originator is the party which obtains the authorization from the receiver. The originating depository financial institution, or ODFI, is the institution which originates the ACH transaction after receiving payment instructions from the originator. Keep in mind that for transactions to enter the ACH network, it must be done by a financial institution. An ODFI must also act as an RDFI, or Receiving Depository Financial Institution, in the event of a return. The ACH operators are clearing facilities for the financial institutions. There are two ACH operators that participate in the ACH network: the Federal Reserve Bank and the Electronic Payment Network. Although both can be involved in a transaction, the main ACH operator is the Federal Reserve Bank. The next ACH participant is the RDFI. This is a financial institution which receives an ACH transaction for posting to a receiver's account. An RDFI does not have to operate as an ODFI. The receiver is a party which receives the ACH transaction and has authorized the originator to initiate the entry into the network. Again, it may be a company, a government agency, or an individual. This screen denotes the flow of an ACH transaction, understanding that it starts with the originator and ends with the receiver. So what governs ACH? The NACHA operating rules are a legal framework for the ACH network. It's published annually, and rules are implemented 4 times a year, usually in March, June, September, and December. In addition to the NACHA operating rules, UCC Article 4A and the Uniform Operating Circular OCC 235 Regulation CC, Regulation D, and Regulation E also govern ACH transactions. Keep in mind, Regulation E only covers consumer transactions, not corporate transactions. OFAC also governs ACH transactions, and when it comes to domestic transactions, financial institutions can depend on each other to conduct an OFAC screening. However, if it's an international ACH transaction, all ACH international transactions must undergo an OFAC scan prior to posting. Let's now move our attention to the types of ACH transactions. We will talk about the Consumer Standard Entry Class codes. We have PPD, POS, SHR, RCK, TEL, WEB, POP, ARC, and BOC. A PPD transaction is a prearranged payment and deposit entry that is usually for direct deposit or direct payment. It is the most commonly used ACH transaction and is typically reoccurring in nature. POS or SHR are point-of-sale debit transactions that are usually initiated using an access card such as an ATM card or debit card. Our first e-check standard entry class code is the Represented Check Entry or RCK. It's a debit entry initially presented as a paper check that was returned for insufficient or uncollected funds. The transaction itself must be less than $2,500 to be collected through the ACH network as an electronic entry. The representative check entry is not subject to the Electronic Transfer Act or Regulation E because it entered the payment world as a check initially. The next standard entry class code we'll discuss is Internet-Initiated Entries, commonly referred to as WEB. A WEB transaction can be single or reoccurring, credit or debit, and is only used when an authorization is given via the Internet or by a mobile device. The next standard entry class code is TEL. TEL can either be single or reoccurring in nature. For a single transaction, a member would call in or a representative from the credit union would call the member and capture the banking information that's usually obtained from the bottom of the check. This includes the routing number, account number, and the amount of the transaction. Sometimes they give a check number, but it's not necessarily needed. For a reoccurring transaction, the member is authorizing multiple transactions. If a financial institution is going to accept multiple authorizations in a single phone call, two things must happen. 1, the call must be recorded, and 2, a payment confirmation must go out to the member. That's also the case for single entries, but it's either or. For a single transaction, either the call can be recorded and retained for 2 years, or a payment confirmation can be sent out to the member by the settlement date. But for reoccurring transactions, it must have both. The call needs to be recorded and the payment confirmation must be sent out to the member. Now with TEL, there are significant rules that must be followed. For one, there can be no cold calling. You must have a relationship with the member. In most cases, the credit union does have a relationship simply because the caller is most likely a member. It would be okay for a representative of the credit union to reach out to them as well. However, for anyone else, an existing relationship must be in place. If that's not the case, they cannot call and obtain the information. That's a breach of the ACH rules. However, a consumer or member can call into a merchant and then that information can be obtained. A lot of rules apply for TEL, but it can be an excellent collection tool. Accounts Receivable Entry, or ARC, is our next standard entry class code. An ARC transaction is received by an originator through the U.S. mail or Dropbox. The check is then used as a source document and presented for payment as an electronic transaction, capturing the routing number, account number, and check serial number. Our next standard entry class code is the POP, or point of purchase. You may have encountered this if you've gone into a place of business to purchase goods or services and you've written a check for payment. That check is then converted right at the time that you hand it to the representative. They capture the banking information and then give the check back to you. Our next e-check application is Back Office Conversion, or BOC, which is a hybrid of POP and ARC transactions. You may have encountered this type of ACH transaction if you've gone into a local Target. In this case, the merchant at the time of purchase agrees to take the consumer's check and then converts that check in the back office. The difference between POP and BOC is that the consumer does not get the check back. We've looked at various consumer transactions. Now let's focus our attention on corporate transactions. We'll cover CCDs, CIEs, and CTXs. The Consumer-Initiated Entry, or CIE, is a consumer transaction. However, it's classified as a corporate entity because the consumer, or your member, is pushing the payment to the merchant and it's received through the ACH network. These are credit-only transactions, and payments are usually made through a home banking product. One of the most frequently used corporate transactions is a CCD. It's a corporate credit or debit, and it's used so one corporation can pay another. Corporate Trade Exchange, or CTX, is also a common corporate transaction, and it's a debit or credit transfer between trading partners. Earlier we talked about OFAC governing ACH transactions. Well, the IAT, or International ACH Transaction, is what OFAC applies to in the ACH network. It's an ACH entry that is part of a payment transaction involving a financial agency's office that is not located in the United States. The entry became effective September 18, 2009, and eliminated the cross-border payments, or CBR/PBR transactions. Whether it's consumer or corporate in nature, all international ACH transactions are now affectionately known as IAT entries. IAT transactions follow the BSA travel rule, which mandates 7 addendum records. Within the ACH transaction or the IAT entry, it must have the name and physical address of the originator, as well as the name, physical address, and account number of the receiver. It then identifies the receiver's financial institution, any corresponding banks along with their bank ID, branch country code, and the reason for payment. All this information must be compared against the current OFAC SDN lists prior to posting. Now let's look at the transaction codes. Transaction codes are 2-digit numeric codes that define various types of debits and credits, and whether the entry is going into savings or shares, checking or share drafts, loans or GLs. If an entry is destined to a savings or share account, it will be identified with a 3 in the first position. If it's going to a checking or share draft account, it will be defined with a 2 in the first position. Loans have a 5 in the first position and are usually credits unless they're marked as a reversal. GLs are defined with a 4 in the first position. If the entry is a credit entry, then the second position will be denoted with a 2, and if it's a debit, a 7 will be in the second position. Some additional codes in the second position would be for an automated return, or NOC, which would contain a 1 or 6. A pre-note would contain a 3 or an A remittance data for an NOD. Examples of the transaction codes are listed on your screen. Thank you so much for your time today.